Hey, my name's James Nicholson. I hope you are well. Well, I wasn't expecting this. Inflation is down. Now, we want inflation to go down, so that's very positive news. But what's actually happened? What does this mean for tomorrow's interest rate meeting? And what does this mean for house prices and homeowners alike? This is really a shocking surprise because Michael Gove has been in the news for the last 2 weeks, preempting a rise in inflation. A blip, they called it. And that's what they were expecting. And you thought they would have had that data together, or at least known something that we didn't, and were expecting inflation to go up. But it didn't. It dropped. So that's very good news for us. Not as much as we'd like, but a drop is still a drop, and that's good news. So we're going to jump into that and more in this video. So while you're here, if you haven't done already, do subscribe to the channel and hit the bell notification. I've got so much important news for property investors, landlords, homeowners, people that rent in the next few days. I'm going to be filming all day today. There is so much stuff going on. There's the energy performance certificates. We're going to be talking about that. There's interest rate rises, what's going on in America and how that impacts us, and much more. So do subscribe and hit the bell. And if you could do me a big favor, smash the like button. Go on, do that right now. Smash that like button. Or if you want, tickle the like button. Just touch the like button in some way, because that really helps us with the YouTube algorithm. So inflation. I wasn't expecting this. We've been talking about inflation for a long time now, over a year, because it really impacts property investing. Now, on one side, it's good because the value of your debt is being eroded. So if you have 100 grand, inflation's been at around 10%. Then the real world buying power of that 100 grand debt that you've got is now 90. That's good. But on the other side, the real bad side of it is the interest rate rises. And so we've had 14 of those in a row. And now we really need to consider pausing, in my opinion. And so I think it's just at a time where we've done so much. Is what we've done enough? I think it could be. So what's going on? So last month, inflation was at 6.8%. Pretty high. It's down, not much, to 6.7%. Now, it is down, and that's good, but prices are still going up, that means. It just means they're going up less fast, not as quickly as they were before, right? So prices are still going up. That hits everybody. And we really need to get this under control, and we're trying to get it close to 2%. Here's an interesting line from the government. I'd like to know your thoughts on this one. Now, you don't have to be politically motivated, Conservative, Labour, whatever, but do you agree with this statement by Michael Gove? Michael Gove has said after today's inflation data that the government's plan is working. The government's plan is working. Now that makes me laugh, because what is their plan? They just said, we're going to halve inflation. But what have they actually done? What are they doing that's helping? Not much. Eventually, inflation just can burn itself out, because it gets to a point where prices have risen so much and people are just unwilling to pay that. And so you'll have a recession. But is the government doing anything? I've asked this on a few videos. Maybe I'm wrong. And if I'm wrong, or if I'm right, comment below. Let's have a conversation about this. What is the government actually doing? And what is their plan? Just saying they're going to halve inflation? Is that the plan? I mean, I could say that. I could say my plan is to get 1,000 houses. But if I don't actually do anything, it's not going to happen, is it? So very weird one there. Anyway, so inflation is down. That is good, because what would have happened tomorrow is it would have been 100% that we would have had a rate increase tomorrow. Now, it was an 80% chance that tomorrow we would have a rate increase. Now, this has changed things. And so analysts and economists, they're saying it's down to a 50-50 chance. Now, I'll take that. Better than 80% positive, isn't it? And so that's good. So maybe as the day goes on, people will be evaluating this and other people will be getting surveyed, and the Bank of England are really going to have a tough decision now. Do they need to raise interest rates? There's a really good interview, if you look on YouTube, with Mervyn King, who was the previous guy, top bod at the Bank of England. He's saying we don't need to raise the rates anymore, that we've done enough. And even if you do increase the rates, probably isn't going to get passed on by the mortgage lenders anymore. So it's not going to have any impact anyway. He thinks it's a pointless exercise. We don't know what rate increases that we've done for 14 consecutive times now are going to do. So just let it play out. He thinks inflation is just going to come down of its own accord. So that's interesting. Now, the biggest driver of the inflation and the worry that they've got at the moment is fuel, right? So fuel is going up. You've got two countries, Russia, Saudi Arabia. They're kind of cutting production at the moment. Not kind of, they are. They're cutting production of oil at the moment. That means there's less of it. And when there's less of something, prices go up. Like houses in the UK eventually, there isn't enough of them, so the price goes up. That's what's happening with oil at the moment. Diesel and petrol has gone up. That will filter into the food companies because they're going to have more transportation costs again. So it's gone down. Now it's going to go back up for them, which isn't good. Core inflation, which strips out food and stuff like that, is at 6.2%, which is down. And food and alcohol, which is the one that's been really hurting people, food and alc, that is still up massively, 13.4%. That's a lot, right? And that's the one that really hits people, especially people on lower incomes. It's tough because, let's just face it, a big chunk of your salary or wages, if you're on a low income, goes to your mortgage or your rent and your food and energy. These are the things that you have that you can't not have, and they take the biggest chunk of your wages. So food is really, it's getting better, but it's still going up at 13% a year. Put that on top, but at one stage it was over 20, which is crazy. So what else is going on? What does this mean for house prices? Well, look, if we if we don't have an interest rate rise tomorrow, which is now debatable, it's possible that we don't. My personal opinion is if they do put the rates up, you're not going to get it passed on to you in your mortgage. If you're on a variable rate, yes, maybe that will happen. Sometimes they haven't been passing those on. But what you will see, I think, is mortgage companies, they're just trying to get some business back in the market. And if we get an indication in the Bank of England meeting tomorrow that rates have now peaked, they won't say for a fact rates have peaked until inflation's down at like 2.5%. Even though it's got to get to 2%. At that stage, they'll say rates have peaked. But they might use language to, like, in a roundabout way, talk about that. So I'll be doing a video tomorrow to dissect exactly what they're saying and what their thinking is. But I feel that once we start getting some rate cuts, then that will be the bottom of the property market. But I think it will be a few months after that. So let's just say that in January, rates even dropped by 0.25%. So they went from 5.25, which are at now, to 5. Not a lot. It still is a rate cut of some sort. I feel at that point, it'll be about 3 months after that you'll see the bottom of the property market. Then you'll see some people that are sitting on the sidelines, which there are a lot of people just sitting there to see when the market bottoms out or when it peaks out with interest rates. Those people will start looking at buying properties again, and then the market will get back to normal about a year after that. So that's what my belief is. But who knows? No one knows for sure what will happen, right? Inflation can be sticky as it is, and it also can come back. You can crush it down to 2% and it can very quickly come back as well. So anyway, look, glass half full, this is better. Not great news, but better news than we're expecting. What do you think? Let me know in the comments. Do smash or tickle that like button. Just do something with it. Subscribe because we've got so much content coming out in the next few days. It's insane. I might have to do 2 videos a day. Otherwise, we're going to miss out on stuff and talk about it too late. So do make sure you watch all my content. Do check out all the other content on the channel. And why don't you go and watch this video right here.